All right, so Lemon Tree Hotels Q2 performance for fiscal year 2025. We're going to unpack all this stuff. We've got a press release, the detailed financials, standalone and consolidated, the auditor's report even, and their investor presentation, which is, I got to say, quite slick. We're going to be pulling out the most interesting parts to give you the insights you need into Lemon Tree Hotels.
Yeah, and looking at it, I mean, the first thing that jumps out at you is this record revenue, right? 284.8 crore. That's a 24% jump year over year. That's got to be worth a closer look.
Yeah, and Patanjali Kiswani, the chairman and managing director, he calls it their highest ever Q2 revenue. But is this sustainable growth or just a blip? What's really driving it?
Well, to figure that out, we really have to go deeper than just the top line number, right? But one good sign is their profitability. Their net EBITDA also went up by 25%. It's 131.2 crore. Now, before you get lost in the financial jargon.
Yeah, please explain EBITDA. I'm sure a lot of our listeners are thinking, what is that? And why should I care?
Right, of course. So EBITDA, that stands for earnings before interest, taxes, depreciation, and amortization. Think of it as a way to measure a company's core profitability. You know, you kind of cut out the noise from accounting and financing stuff. So this 25% jump is really saying that Lemon Tree is getting more efficient with their operations or core business.
Now, this is where I got really interested. Their investor presentation mentions that if you take out the increased renovation expenses, which were 8 crore higher than last year, then their net EBITDA margin would be like a huge 48.9%. It's a 340 basis point jump.
Huh.
Are they spending in the right places to get that?
Yeah, that's a good question. It raises some interesting points, you know. On the one hand, they're putting a lot into their properties, which could show confidence in their growth, right? But will those renovations attract the right customers to justify the expense? It's a risk they're taking.
Especially when you look at their occupancy. The reports show it dipped a little to 68.4%, but the average room rate went up 12% to 5,902 rupees. So people are paying more for Lemon Tree, even if they aren't filling as many rooms. Is that the right trade-off, though?
Well, that brings us to a very important metric in this industry. RevPR, revenue per available room. It's the average daily rate times the occupancy rate. Even with that dip, Lemon Tree's RevPR actually went up 7% to 4,035 rupees. So even with slightly fewer rooms booked, they made more per room.
Interesting. It seems like their renovations could be part of this. Keswani, in the press release, says that demand is expected to be higher than supply in the next few years. And there's more demand for branded hotels. He sees that as a big opportunity for Lemon Tree. But are they making the right renovations to get that premium market? How does their RevPR growth compare to competitors who want the same customers?
That is the question, isn't it? They're banking on these improvements to attract people willing to pay more, to take advantage of this market shift. It's a classic hospitality move, you know? Invest in quality, improve the guest experience, and charge a premium. But is that enough to really stand out?
And it's not just about owning and renovating properties anymore, is it? The sources show that fees from managed and franchised hotels are a growing revenue stream for them. It jumped 28% to 13.4 crore rupees. Is this a good way to diversify their income? Or are they getting it over their heads?
It's definitely something to keep an eye on, this move towards managing and franchising. It lets them, grow their brand and make more money without having to invest as much capital as they would if they owned the properties. It's a faster way to grow. But it also comes with challenges, of course, like keeping their brand consistent and making sure the quality stays high.
Right, and that's where Fleur Hotels comes in, right? Their investor presentation says there's been a 35% growth in fees from Fleur Hotels. It's up to 18.4 crore rupees. That's a big chunk of their management fee revenue. Is Fleur Hotels the key to their success here, or are there other things happening?
Yeah, Fleur Hotels, as a subsidiary of Lemon Tree, it seems to be a big part of their expansion into management and franchising. It'll be interesting to see how they develop and if they can copy this success with other brands as they grow.
And they are growing aggressively. They opened 5 new hotels this past quarter, 193 rooms. And get this, they signed deals for 19 new properties, adding 1,373 rooms. And they opened India's largest inventory hotel in Q3 of fiscal year 2024, Aurika, Mumbai Sky City, 669 rooms. Are they growing too fast? Or is this what they need to do to, get market share?
This fast expansion, it could be good or bad. Gives them a lot of opportunities to grow, of course, but it also makes you wonder if they can handle it. Can they keep the same level of service and brand standards with all these new places? That's a big challenge for them.
Yeah, it's A lot to take in. They're really banking on this future where demand for branded hotels in India keeps going up. But what if it doesn't happen? What if the competition gets even tougher?
Right. Those are valid concerns. It's a dynamic market, very competitive. There are always risks. We need to look at their financials closely
Yeah.
to see how well they can weather any storms that come up.
Speaking of responsibility, let's talk about sustainability. Lemon Tree is doing some pretty good things in ESG, environmental, social, and governance. They're using renewable energy and giving hiring opportunities to what they call opportunity-deprived Indians, ODIs. Are these initiatives just for good PR, or are they really part of their business?
Well, ESG is uh, it's more than just a trendy word these days. It's something investors and consumers really care about. Companies with good ESG performance, they're seen as more sustainable and responsible, right? Which can help their brand and attract more customers.
And they're not just talking about it. They reported 10.75% renewable energy usage, 29.27% certified green buildings,
Hmm.
and their workforce is 16.96% ODIs. Those are some solid numbers.
Yeah, it seems like they're genuinely committed to ESG, which could give them an advantage, especially as consumers start to prefer businesses that are sustainable and socially responsible. But are they doing enough to tell their target audience about it? And are these initiatives really making a difference?
Okay, so we've covered a lot. We've seen impressive revenue and profit growth, but we've also, found some potential risks because of their aggressive expansion. And we started to look at their commitment to ESG and how that might affect their success.
It's a complex picture. We have to look at the financials more deeply to really understand their financial health
Hmm.
and their ability to deal with challenges.
Exactly. So let's dive into those next
All right.
and see what else we can find. All right, so let's get into the details of Lemon Tree's financials. See if the numbers actually support this big growth story they're telling. One thing I noticed was their cost structure. They've actually lowered their payroll expenses as a percentage of their total revenue. Does that mean they're getting more efficient with their workforce?
Yeah, it could be. It's definitely a good sign, you know. Cutting labor costs while they're expanding like this suggests they're figuring out how to optimize their workforce. But their F&B expenses, food and beverage, as a percentage of revenue that's gone up a little, is that because input costs are higher? Or could it be because they're trying to get those higher paying guests, the ones who might want more expensive food and drinks?
Yeah, good point. And speaking of expenses, their power and fuel costs also went up a bit. But their other expenses as a percentage of revenue actually went down.
Hmm.
Is that them cutting costs on purpose, or is there something else going on? How does all of this fit into their overall cost management strategy?
Yeah, it's like they're playing this balancing game, managing all these different cost categories. They're probably trying to make up for increases in some areas, like power and fuel, which might be going up because of things like inflation. It's tricky, especially when they're adding new hotels all the time. But it does make you wonder: are they cutting corners on quality somewhere to keep those profits up while they're growing so fast?
That's making me think. We can't forget about those big renovation plans they have. Remember how their net EBITDA margin would be even higher if you didn't count those extra renovation expenses. Could this cost management strategy be tied to that? To their long-term plan of getting more wealthy customers.
Yeah, absolutely. They might be streamlining some costs now to free up money for those upgrades later. They're betting that those renovations will attract people who'll pay more, and that'll justify the investment. But it's a gamble, right? What if those renovated places don't make as much money as they expect? What if cutting costs ends up hurting the guest experience?
Let's move on to their debt. It actually went down by 90 crore rupees from 1,912.6 crore in September 2023 to 1,822.6 crore in September 2024. And their cash profit, which is PAT plus depreciation, that went up by 43% to 69.8 crore. Is that enough to keep their lenders happy, especially with all this rapid expansion they're doing?
Well, reducing debt and increasing cash profit at the same time, that's definitely a good thing. It shows they're making enough money to run their business and grow and pay down some debt too. But are they paying it down fast enough, considering, how aggressively they're growing? They're taking on new properties, which usually means more debt. So are they really lowering their debt overall, or are they just replacing old debt with new debt?
And that brings us back to the big question, doesn't it? Will all this expansion actually pay off for them? Can they handle it all, effectively? while still being careful with their finances.
Yeah, that's the key. They're betting on this future, where demand for branded hotels in India just keeps booming. But what if it doesn't? What if they expand faster than the market grows? They could end up with a, bunch of hotels that aren't making money and a ton of debt.
So for our listeners, if they're thinking about investing, or even if they're just interested in this, what should they be watching for in the future to see how Lemon Tree is doing? What are the signs that things might be going wrong?
We'll keep an eye on their occupancy rates and RevPAR trends, especially in those new hotels they're opening. That'll tell us if their expansion is actually bringing in more money. Also, watch their debt levels and how well they're managing them. If their debt goes up a lot, but their revenue doesn't, that could be a warning sign.
And we should be looking at their cost management too, right? Can keep their margins where they are,
Yeah.
and still give guests a good experience. Are they cutting corners in ways that could hurt their brand?
And don't forget about ESG. Are they really doing what they say they're doing? Or is it just, greenwashing? Are their ESG investments actually attracting customers and investors, the ones who really care about sustainability? These are all important questions to think about as we try to, figure out how Lemon Tree is doing and what their future looks like.
Yeah, we've definitely uncovered some complex stuff here. It's not as simple as just looking at their revenue and profit growth. We have to think about the risks that come with their expansion and their ability to manage costs well, and whether their ESG initiatives will actually work out in the long run.
Exactly. It's about connecting the dots,
Right.
looking deeper and asking the tough questions. And in the end, it's about giving our listeners the information they need to make up their own minds about Lemon Tree's future.
So let's try to wrap this all up. We've looked at their record revenue and profit, their ambitious expansion plans, their cost management, and their ESG work. But what does it all mean? What's the big takeaway here?
Lemon Tree Hotels is at a crossroads, you could say. They're doing really well, but they're facing some big challenges. Their future depends on whether they can manage all this growth and control costs and deal with a market that's always changing. And maybe most importantly, they have to convince investors and customers that they're serious about sustainability and that it'll be good for them in the long run.
It's a fascinating story, full of potential, but also some risks. And as always, it's up to you, our listeners, to decide what you think. Okay, so we've looked at Lemon Tree Hotels from every angle, haven't we? Record profits, this huge expansion they're doing, how they're managing costs, and all their ESG stuff. What's the bottom line for our listeners? The people trying to make sense of it all.
Well, it's like you see this ambition, and then you see reality kind of setting in. On paper, they look amazing, right? Revenue's way up, profits are good, they're growing like crazy. But we also looked at the potential problems, right? Can they really keep the quality up when they're growing this fast? Is this cost cutting going to work in the long run? And are they really doing all this ESG stuff they're talking about?
It feels like Lemon Tree's at this turning point. They obviously want to be like the top dog in the Indian hotel market, but they're kind of walking a tightrope here. They got to grow fast, but they also got to be smart with their money, and they got to deliver what their brand promises.
Right, and that's where you come in. You, the listener, you're informed. You've got all this knowledge now. You can see past the headlines, right? You can ask the right questions and really look at Lemon Tree's performance, with a critical eye.
So to wrap things up, let's leave you with something to think about. Imagine you're an investor and you're looking at Lemon Tree. What would worry you the most, based on everything we've talked about? And what would you want to see in their future reports, to address those worries?
We've given you the pieces, right? The good financials, the ambitious plans, the risks, the sustainability stuff. Now it's up to you to put it all together and decide if you think Lemon Tree is a company worth investing in. Check out the source documents. They're linked in the show notes. See what you think.
Until next time, keep digging deep and never stop asking questions.